Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. The first part of this video will be reviews of the names I've covered in the past videos. This week will be on Kiwi Dollar, Gold, Deutsche Bank, Disney, Wells Fargo, and Starbucks. The new coverages are Kiwi Swiss, Dollar Stocky, Dollar Swiss, Euro Swiss, Estee Lauder, Baidu, and Nissin Foods. In case you don't want to know about the old stories and just want to get straight into what is coming up, I have put in timestamps in the description for your convenience. I will start off the review with Kiwi Dollar. I noted in the last video on the 11th of August, Kiwi Dollar had a false break over here, and that the symmetrical triangle is not completed just yet. Now this week, Kiwi Dollar extended its rebound to close above the 20-week simple moving average, adding to signs that further upside is preferred. The symmetrical triangle is still developing, and we can determine its outlook only via a breakout or a breakdown. Let me switch to the daily chart. On the daily chart, I believe another bullish pattern may be forming. Let me just remove some of the lines. I believe Kiwi Dollar may be forming a double bottom on the daily chart. It has bounced off the 58.65 level at least 5 times, and this has led Kiwi Dollar much higher. And in order to complete this double bottom, Kiwi Dollar has to close above 62.15 on a daily basis. And once we have that, there is bullish confirmation, and the textbook target is at 65.73. So I'm waiting for further upside in Kiwi Dollar to be convinced that it is indeed forming a bullish pattern on the daily chart. I last covered gold in the video on the 21st of July, in which I said that after a completion of a pattern over here, corrections are common, though not always, and this correction would bounce off supports at either 2400 or off the Ichimoku cloud. Gold has completed the rectangle and has had 2 corrections, one over here and one over here, both of the times bouncing off the Ichimoku cloud. And I believe that gold is right now in the bullish resumption phase. The completion of the rectangle has a textbook target at 2550, and I believe that gold is well on its way. Last close 2508.14. Deutsche Bank has again performed as expected. I said in the video on the 11th of August that after a sharp decline over here, I expect a rebound first before resuming the downside. I will keep repeating myself that corrections are common after pattern completions, and Deutsche Bank could go back to the point of breakdown, which is around 14.35 or perhaps slightly higher, before resuming the downside. So this upward move, and maybe more, is expected and not against the bearish outlook that I currently have on Deutsche Bank. I last touched on Disney on the 30th of June, during which I highlighted that Disney can qualify as a head and shoulders bottom bullish pattern as long as it rebounds above the 90 level. I know it has not, but this week's move is a good start and a hint that the second shoulder may have been formed. So don't give up on Disney just yet. Deadpool and Wolverine may just be able to save Disney. What I want to see Disney happen is Disney rising into and preferably above the cloud. That would give me more confidence that Disney is indeed forming a head and shoulders bottom. Once there is a weekly close above the 124.8 level, a bullish outlook is confirmed, and I repeat, the textbook target is much higher at 171.06. Wells Fargo is undergoing a corrective rebound, just as I said it would in the video on the 11th of August. This is because of two reasons. Number one, this is the corrective phase of the bearish pattern. After pattern completions, it is common, though not always, to have a correction to the point of breakout, perhaps even slightly higher. Number two, there was a gap down on the 2nd of August that I expect to be filled first before resuming the downside. So further upside should be expected still next week. I first covered this name Starbucks on the 14th of July and noted its bullish potential due to a double bottom that has a textbook target at 97.13. This week, Starbucks gapped much higher to complete this double bottom and reach a high of 96.01, which is about 91.8% of the expected move. The next move for Starbucks, in my view, will likely be lower. Two reasons why. Number one, there is this huge gap up on the 13th of August, and I believe that gaps are usually filled first before resuming the upside. Number two, Starbucks completed a bullish pattern, and after pattern completions usually come the correction. Don't be surprised if Starbucks fall back to around 78, 79-ish before resuming the upside. I've reviewed the ongoing crosses and names that are still under monitoring, and now I'll move on to new coverages. First up is Kiwi Swiss. I believe Kiwi Swiss is forming a rather mini head and shoulders bottom. It may have formed the second small shoulder over here in the last two trading days, and once it closes above the neckline, which is slightly upward slanting around 0.5260, a bullish outlook will be confirmed. The textbook target is at 0.5571, and there are resistances. Let me just show you. There are resistances at 0.5352, 0.5421, and 0.5474. These resistances can repel Kiwi Swiss's advance. Next is Dollar Stocky. I believe Dollar Stocky may have completed a symmetrical triangle in a bearish direction this week. So I believe there is now bearish confirmation, and the textbook target is at 9.21, which I believe is an unrealistic target in the short term because price action should not fall directly in a straight line to the 9.21 level. It usually goes down and up and down and up and down towards this target. So there are supports that can bounce Dollar Stocky higher to end its bearish outlook. The supports are here. Firstly at 10.28, followed by 10.17, then 9.9. If Dollar Stocky manages to break all these three supports, then it would very likely go all the way down to 9.21. Bearish on the Dollar Stocky. This next cross is a very much well-watched one, Dollar Swiss. I believe it may be forming a head and shoulders bottom, a bullish pattern. But first, the sharp downside exhaustion over here last week suggests that Dollar Swiss may be directionally higher in upcoming sessions. Also, you can see that price action was excessively below the lower Bollinger for 2 consecutive weeks, which also suggests a potential 1 to 3 weeks worth of a rebound. So just to be clear, Dollar Swiss at this juncture is not bullish. There is just bullish potential that must be confirmed via further upside, preferably a close within the cloud, and better yet, above the cloud. A close above the neckline at 0.9224 on a weekly basis, and I don't think this is happening in the next 2 to 3 months at least, will be a bullish confirmation that has a textbook target at 1.0111. I am starting coverage on the EURCHF in the final phase of its bullish outlook. EURCHF completed its falling wedge over here back in February this year, and with most chart patterns has undergone the completion phase as well as the correction phase. Last week's bounce off the support trend line over here that resulted in the close within the cloud is likely the start of a bullish resumption phase. The textbook target of this falling wedge is at 1.0408. It would be more appropriate to target the resistances first, which are at 0.9926 as well as 1.0095. I'm done with FX crosses and now I'm moving on to equities. The first name that I want to cover is Estee Lauder. It is a beaten down name, much like Starbucks. Estee Lauder fell all the way down from around 370 to the current level of 82.26. I love beaten down names simply because they are the ones that few will like and therefore a lot will miss their rallies. I suspect that Estee Lauder may be forming a falling wedge, which is a bullish pattern. I believe that it has bounced higher this week to form the falling wedge support, and note that there is divergence between the price and RSI. Let me just bring up the RSI, the relative strength index. So if you compare price action here and here, it's very clear that the price action here is much lower than the price action over here. But if you refer to the corresponding RSI, the RSI over here is higher than the RSI over here. So this tells us that there is a divergence between the price and momentum. Current price action, even though lower than the last one, is not as weak in terms of relative strength compared to the last one. So this is a sign that there may be a bullish reversal going forward. So I suspect the next move for Estee Lauder will be higher. Again, just to clarify, Estee Lauder right now, the outlook is still bearish, but there is bullish potential from these signs, and once it breaks out above the wedge resistance, we can get a bullish confirmation. The textbook target is at 191.31. Baidu is another beaten down name that I've been monitoring for a while to look for signs of rebound, and the signs have emerged. First, price action has developed into a falling wedge, a bullish pattern. Second, there is price momentum divergence on the RSI. So if you look at the price action over here, comparing to the one over here, you can see that the latest price action is much lower than the last low. But if you look at the corresponding RSI, the latest RSI is actually slightly higher than the last low. Therefore, telling us that there may be a bullish reversal going forward. Once there is a breakout above the resistance trend line, then there will be a bullish confirmation, and the textbook move is around 25.75 Hong Kong dollars. The last name for this video is Nissin Foods, a Japanese company. I believe it has completed a head and shoulders top, a bearish pattern on the weekly chart. The textbook target is at 2,539.5. Now, because of the sharp decline as well as the gap down on the 5th of August, I expect the next move for Nissin Foods to be higher first as a correction and to fill this gap before resuming the downside. There are supports at 3,640 as well as 3,124 that can bounce Nissin Foods higher and prevent the textbook target from being reached. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video it will highly likely be on new crosses and names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.